The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Welcome, folks, to the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me. I absolutely love being here with you. Let's get right to the markets. We've got the Dow down 17 points right now. S&P's off about 3.5. NASDAQ up 5. Russell 2000 off 1.5. New York Stock Exchange, that is where we are going to start. Down 31 points. As we know, the New York Stock Exchange has been the strength, has been the, and is the widest breadth in the marketplace out here. And if you are listening in on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can always catch the live stream of this show. Just go to the homepage of tfnn.com. Over on the right-hand side, you'll see 3 little telephones. Go ahead and click on that. This show will stream live to you. You'll be able to see the charts on your mobile device, your iPad, your any kind of device out there, any kind of smartphone device out there. And you can always catch the archive of this show on Channel 10. That way you'll take a look at the charts. I'll absolutely teach you something, or would like to be able to teach you something. And don't forget, you can always give us a call at 877-927-6648. Also, this is the beginning of our Great Panther Silver giveaway. We gave a 1-ounce silver coin, just a beautiful coin, out last hour to Richard in Marblehead, Massachusetts. So get in on the action, folks. It's real simple. As long as you're over on the homepage of TFNN.com, go sign up for it. A simple thing to do. So let's go start off by taking a look at the New York Stock Exchange. You're going to see on my screen here just some beautiful patterns. What we've got here is we've got two 1.618 butterfly patterns that complete at approximately the same price point. I'm going to go ahead and short this up on my screen here. You can see you've got from the range of about 89.37 to 89.77. Two 1.618 butterflies confirming approximately the same general area. The first one takes you back to the March 19th swing point, that high, 83.27, down to the low that was put in June of 2012, down at the lows of about 72.22. If you took the difference there, if you subtracted that, multiplied it times 1.618, added it to the 72.22, it would take you up at about the 89.77 level. That is the larger 1.618 butterfly pattern. You've also got the September 14th swing point high. We know that's a key swing point. That high, 85.15, down to low in November. That low was 78.41 out there. If you took the difference between those two numbers, multiplied times 1.618, added that to the bottom of November 16th, would take you up to about the 89.37 level. So you got two 1.618s. Where did the New York Stock Exchange actually get up to? Well, let's see. The high on Friday, 89.04. The high this morning, 89.11. 89.11 versus 89.38. Remember, these areas here, folks, these areas are to be used as guidelines. So you could say right now, I'm going to go ahead and erase this one so we can go take a look at the actual candle that's forming so far this morning. And it's all going to be about the candle. And it's really important in taking a look at strength. And there's no question the New York Stock Exchange has been strength. Well, as we take a look at today's candle, what is that? What is that candle? That's right. What we've got here so far today is a bearish engulfing candle. New York Stock Exchange gets down to the price, below somewhere intraday today, below 88.60.76. And so far it's gotten down to 88.64.01. But if it gets below 88.60.76 and closes, it closes actually below 82.45, you will have a key reversal day and a bearish engulfing coming in at two butterfly expansion patterns out there. That, folks, is a signal. That would absolutely be a signal out there. A lot of time left in today's trading session out here, but we're starting to see potential signals in the marketplace. Again, 877-927-6648. Let's go to our first caller. Let's go all the way out to the West Coast, to British Columbia, to our man Rick. Rick, thanks for calling. Thanks for holding. How you doing today?
Hey, really good, thank you.
Oh, that's good. You have a nice weekend?
Oh, yeah, really.
Yeah? Yeah, starting to get into the hockey now that hockey season has finally started.
I've been watching quite a bit. I think they're playing a lot more games in a condensed time frame, if you know what I'm saying.
Yeah, so they're going to be tired.
Seems like it anyway.
Yeah, they're going to be tired. Some of the games that I've been able to catch, folks, they look a little bit rusty out there.
Your Tampa team's playing pretty well.
Yeah, Tampa team is. My Red Wings though, they're struggling out there.
Well, I mean, they've been the strongest team over the last decade at least.
Yeah, they have, but now without Holmstrom, without some of the key guys, that they've had forever. It'll be interesting to see how it all plays out. But yeah, they are certainly playing a number of games, and I just hope that nobody gets injured too badly. But you want to take a look at the small cap. So what are you looking at out here? And
I'll tell you, I'm looking. If you look at the volumes on this thing, it's pathetic.
Yes.
Yes. Absolutely pathetic.
Except for January 2nd.
Well, I put it on a weekly.
Yeah. No question on a weekly chart. Absolutely. We're starting to get some potential key reversal signals today, and all the strong ETFs and indexes and sectors out here.
Well, actually, that leads me to the Bradley model.
Okay.
I think it's tomorrow, and keeping in mind that they had the 29th as a turn date.
Okay.
But, I don't think it's been working all that well, to be honest with you. Some of those, it's inverted, if you know what I'm saying. Like they had the 21st, let me just get the date here, the 20th as a top this month and the 29th as a low. Well, that if this works, is completely inverted. In other words, it goes the opposite direction of, the market. But they had the 29th, which is tomorrow, as a turn date. That's all I know.
Well, what's interesting about the Bradley model, I'm going to do it real quickly here on the screen, and I've got it up against the S&P 500. I've got another chart somewhere, and when I took a look at the Bradley model, if I actually shifted it back, and I can't recall the exact time frame, and I'm not going to be able to do it just during this segment, but I'll find it and then I'll pull it up on a chart out here, whether today or tomorrow. I actually had shifted the Bradley model. And as I shifted it back, because it's really more of a guideline as to necessarily a specific day, it was actually hitting pretty well when I went ahead and shifted it back. And sometimes, I think in using the Bradley model, because it's more of a guideline, you have to be willing to move it, back or forward to get a feel for the trend that was out there. But it was interesting. If you use it or if you overlay it on a chart, Rick, you should try to do that, because it's pretty interesting out there. And what you're trying to do is you're really, and folks, if you do it as well, you're trying to identify points where, you're finding the most number of hits or turns out there. And so it's just one way that I've been able to use it, just to get an idea, because it's using a number of different planetary configurations and correlations out there, and just as much as trying to invert it, I think it's just as right to go ahead and shift it back and forward. Not by years, but by several weeks. Yeah,
I know Larry will be on later, and he gets into it pretty heavy with turn dates, and I don't know if he follows the Bradley model, but is there anything that, are the stars aligned, or what?
Well, I think they are. I mean, if we take a look at, so we've got the market moving up into these butterfly patterns. I'll go ahead and just put it's going to be easier for me. I'll just put the futures contract up on the screen. So you got the S&P futures, which has been making beautiful expansion patterns. And what it has actually, in essence, done, today or Friday, was it's completing a 1.272 butterfly pattern. And patterns actually are the priority. So the number one priority is there an actual pattern. Well, if you take a look at the butterfly pattern that has in essence been formed Friday or today, let's say, then you start taking a look at what other signals are out there. Well, we had the full moon come in on Saturday night, 11:30 our time, East Coast time. You had Saturday was a 4 planetary index day. That is typically a reversal day. So you got a number of things moving up. You've got the market moving into overbought condition out here. And now we're starting to take a look, and we're starting to see key reversal days. And key reversal days are big things. The key reversal day in the S&P actually took place on November 16th as it was making its low. And so I pay attention to key reversal days, especially when they are aligning with everything else. Now, we have, in order for the S&P to have a key reversal, or the ES Mini, I should say. Actually, let's go to the S&P 500. Let me pull up the index, and then we'll go back over to the IWM for you. But right now, the New York Stock Exchange, the strength in there, if it closed like this, it's having a key reversal day and a bearish engulfing. And that is a signal that you're looking for. If we take a look at the actual S&P cash index out here, that too, in essence, 1506 would have been the number for it to complete the 1.272. Got up to 1503.23 this morning, 1503.26 on Friday. That's close enough for our work. And the S&P 500, in order for that to have a key reversal day, let me see, 1503.26. Can't actually have a key reversal day today. Can only have a S&P cash could only have a bearish engulfing or dark cloud cover or something like that. So we're starting to see the remnants of reversals out here. Now, where it's going to take us back to, it's certainly going to come back to that January 2nd level. Whether it comes back to the top of it, in the case of the S&P, that would be the 1462 level. More likely, it would be the bottom where it actually had the breakout, that 1426. But on the IWM, which has also been strong. Russell 2000 and New York Stock Exchange, I think those are the two big strong guys out there. The the IWM, if it closes below 89.29, that will be a key reversal day. That'll be a key reversal day in bearish engulfing. So so that lines up maybe with the volume, with the stars, with everything, and it says the IWM will come back and at least test that January 2nd level, whether that's 86.91 or 86.04. Or come into the gap, which I suspect is really what it wants to do, that December 31st level. And the retracement there, for this thing, the IWM, just to make just a normal retracement, just a 0.382 takes you right into the gap. So I suspect what that means is the IWM will get to the 84.43 level. That's how I see things right now. But it's going to all be about how the day closes.
Yeah, no, exactly. And
for the signal.
And follow that euro. It never hurts to take a look at the euro.
No, it doesn't. The euro's been real strong. The euro made a 100% move on Friday, and so it is important to take a look at the currencies out there. And that 100% move is going back, folks, to a cluster of candles back to March of 2012 out there. And really still hasn't shown a whole lot of weakness. I think, Rick, you and I were talking about the pattern that seems to be set up on this, that the euro wants to get up into the 138 level.
Yeah, it does, actually. On a daily, it has an inverted head and shoulder formation.
Okay, yeah, it does.
See that?
Yeah, I do, yeah. It's actually pretty... Go ahead.
Yeah, no, and so that would be a nice little pullback back to the neckline. You know what I mean? But I don't think we've quite finished the distance yet, have we?
No. It's a pretty good one. It's not off by much, really, from a time frame standpoint as well. So, Rick, always good hearing your voice. Thanks so much for calling.
You bet. Thanks, man.
You bet. Have a great day. 877-927-6648. Dow's off 25. S&P's down 6. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow off 18 points, composite up 19 cents right now. And if you're watching us on Tiger TV, what I've got on my screen here are really the 4 quadrants, the 4 futures contracts for the indexes. Up in the upper left-hand corner, you got the NASDAQ future. We're looking at 30-minute charts, by the way. Up in the upper right-hand corner is the Russell 2000. Lower right, the Dow futures, and lower left is the ES Mini. Now, one of the things I like to do as I'm watching the markets, this is one of the screens I like to be paying attention to. I like to take a look at who is the weak hands in here. And right now, today, the weak hands happen to be the Russell 2000. We had Rick from British Columbia who called. We were taking a look at the IWM. We were taking a look at the bearish engulfing candle that had formed thus far. Now, it's not until the end of the trading session that you know what candle formations are out there. It is the Russell 2000. We can see that is the weak hands, and I use that by taking a look at that relative strength weakness. In this case here, it is the relative weakness index as the Russell 2000 on the 30-minute chart down towards that 30 level. Hasn't made it all the way down there. It's the Russell 2000 that's going to give us a signal with regard to our first bounce here in the marketplace. I'm going to go down to the 10-minute chart here. As we take a look at the 10-minute chart, you can see price here moving down into that oversold territory. Price typically travels with inside that 70 and 30% range. When you get up and over that level, you know to be paying attention to it from an intraday standpoint. And we want to use these tools, these charts. All your trading decisions should be made based upon the time frame that it is that you trade. If you'd like to be a day trader, if you will, or an intraday trader and play the swings, then you want to make sure that you have these tools that you use. In this case here, we're paying attention. We're going to what is the weak hands of the morning so far. Happens to be the Russell 2000. You can see so far it's producing a little bullish golfing candle as it's moved down into the oversold territory, which you expect to see bulls and bears show up. And so it's going to be this first bounce here in the market that's going to reveal a lot of information to us. When I say that, you can take a look at so far what you've got in the Russell 2000. You've got higher lows. This, again, is the 10-minute chart. This is coming back into the time frame of about 8 o'clock in the evening on January 23rd, at about January 24th at about 3:30 in the morning. Again, we're taking a look at, in this case here, higher lows out here. We have the same thing occurring here this morning. So far what the Russell 2000 has done is really just come back into the gap up from the trading session from the open last evening out there. So a little bullish engulfing candle right here on the 10-minute chart. And we'll see what this bounce. We'll see if this is going to be a bounce, move all the way back up towards its top, or just simply a retracement out there. Let's go out to Fort Collins, Colorado, to Mark. Mark, thanks for calling. Thanks for holding. How are you today?
Good. How are you?
Excellent. Thanks for asking. You wanted to take a look at Chipotle. Tell us what you're doing, how we can help, and...
Well, I've shorted this successfully twice, and I'm patiently waiting for the third time's the charm. And I'm seeing it go up into it's going up lighter volume into a pretty significant down volume day from way back in October.
Yes.
Second, if I do a little channel from its low, looks like it's starting to hit the top side of this mini up channel that it's in. It got upgraded.
Okay, so you're running a channel line off of the basically off of the October 24th low out there.
Well, I'm doing the highs of this channel, so like the November 7th high, kind of, it's a little not perfect, and then there's a December 19th, and then there's a January 2nd or 3rd.
Okay. Now, when you're creating your channel lines, you have more than you have 3 or more contacts.
Well, this would probably be the best third one we're getting right now, if it stops. So. Yeah,
because when you run channel lines, one of the keys out there, and this is the king of channels is Mr. Bud Rolfs, and so he's the one that each of us need to learn from. And what you want to make sure that you've got, at least you want to have as many co-located opens and closes. So it doesn't matter whether it's an open or close. And that's going to give you your best price channel versus trend line. So you're not looking at the bottom of a candle. You're not looking at the wicks. You're really looking at the bodies of the candle, which is great because the bodies are truly the essence of price. And I think that if you do start off of the low here, I drew one in on Tiger TV, which would be the open of the session on October 23rd at that 234 level. My next area of contact really would pretty much be the open of December 4th out there at about the 261 level, and then you're going to get the close of January 7th. So I think that creates a pretty nice bottom part of the channel. I just quickly, and Mark, can you stick with us through the break?
Sure.
Oh, great. Okay, we're going to come back with Mark in Fort Collins. We're tearing apart Chipotle out there. Mark's looking for a good short entry on it. 877-927-6648. Dow's off 17. S&P is down 4. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow down 15, Composite up 5. You've got Apple up $9 and change right now. Google up $1, and out with earnings after the bell today. We've got Yahoo, VMware, Seagate, and Lumina, just to mention a few. Tomorrow morning by the open, you've got Peabody Energy, D.R. Horton, DHI. You've got Ford, Corning, GLW's their ticker symbol, Harley-Davidson, Hog, Eli Lilly, Pfizer, and Valero, just to name a few. Let's go back out to Fort Collins, Colorado, to Mark. We're taking a look at Chipotle. We were talking about rising price channels out there and the importance of identifying as many co-located opens and closes at the top and the bottom of the channel line. And as Mark, as we do take a look at Chipotle, this morning it is trading out at $312.63. Volume is 294,000 shares out there, and it's clearing a swing point out here, the most recent swing point, which would be January 2nd. That has only 491,000 shares, so it looks like it's got the volume in order to break out above that today, with having 300,000 shares in just the first hour of trading. And it's also trading with inside that downdraft that you identified, which is the July 20th level. So it's trading with inside the candle. And I like to take that specific candle where you have the downdraft and just draw a horizontal line across the top and the bottom of that, and so taking out a swing point today on volume, this may be setting up another A to B equals CD up. This completed one A to B equals CD up that took the equity right to the bottom of that downdraft area, and that's coming off of the low session that you would start your rising price channel. That's the October 23rd low, 233.82. Your B point on this would be of this small A to B. The first A to B equals CD happens to be the 284.57 from November 7th. Moves down into a retracement area on November 15th. At 253.39, A to B equals CD, says 304.01. The candle that we were just talking about that is the swing point that it's taking out was the one that got up to 306.73, the one with January 2nd from 491. So it completed the 1-to-1 A to B equals CD, and this could be completing another A to B equals CD. If we use the smallest one, Mark, what I would do is I would come off of the probably the swing point that's within inside the price channel. I'd probably take the November 28th low of 257.24 and take the high of that January 2nd candle and the low that came in on January 16th. And 1-to-1 says 330.74. So looks to me like you're going to get a confirmed A to B equals CD up, which will take outside at least of the rising price channel that I drew in there, and at least come back into test that downdraft area from July 20th. So it sort of looks to me like that's where Chipotle wants to move to until we see any other signs here.
Okay. Do you do much with Bollinger Bands?
I don't. I occasionally will put. I don't trade them, I should say.
Okay.
But if you do, not that I haven't put them on charts or what have you. Do you have a Bollinger Band on Chipotle? Is that what you're looking at?
Yeah, and it's blowing right through the top of the top band, and sometimes when that happens, it'll spike back down. But sometimes it just keeps going. So I just was curious as to whether you ever look at that in conjunction with like a RSI or a MACD or anything like that.
How I would, how I have looked at them in the past, and like I say, I don't trade them. They're good for being able to identify, whatever trading indicators one uses. I'm not going to say one is better than the other, but what you would do, what is a great way to utilize any indicator, is to use the candle signals that go with it. So I'm not familiar enough to, on the Bollinger Bands. No, in this case here, I've got it up on my screen, but you and I might have different settings.
Okay.
So, go ahead.
Oh, and then the other thing that it's bumping up against is that 200 exponential moving average, which it's been below for quite since it really broke down, and it's hit it. It hit it once in September 17th-ish, and it's coming back up and hitting it now. So I'm just curious as to whether you look at that as well. So I was kind of looking at the Bollinger Band. It's spiking above that. It's running into that 200 EMA. And it's,
yeah, no. Now the exponential moving averages, I think they're good to have on your screen. I think identifying that 200 period, and you're exactly right. The last time, folks, that Chipotle hit the 200 EMA was back in September the 17th, as a matter of fact. And then you got a series of candles that, if you stitch them together, gave you the bearish reversal signal. So it's a great. Thanks for pointing that out, because it's another great example. Whether it be a Bollinger Band, whether it be an EMA, and what happened back in that September time frame, Mark, was that as you hit it, the trade, and maybe that's where you would have gone short. To me, the real signal would have been utilizing an indicator such as 200 period exponential moving average, and then waiting for the signal from the bearish candles that would form, and that would be your trigger point. So, okay. If this same pattern holds again here today at that 200 EMA, you just have to know that it crossed a swing point with volume. But if it holds in there and then tomorrow you get the reversal signal, that might be your place to go short. Now, in this case here, because you brought up that rising price channel, it's probably the lower end of that rising price channel that will tell you whether or not you're really in a narrow consolidation range here for the time being.
Okay.
All righty.
Fair enough.
Hey, thanks for calling. I appreciate it. Have a great day. And folks, we were just with Mark in Fort Collins, Colorado, and we've got another winner in our Great Panther Silver Giveaway. We are giving away a silver coin each hour, on the hour, through Friday. And our first winner we had earlier this morning, which was Rick from, he was up in Massachusetts, Marblehead, Massachusetts. And our next winner here is Josh from Denver, Colorado. Unfortunately, we weren't able to reach Josh on the telephone, but congratulations to Josh. And, folks, it is as simple as going to the homepage of TFNN.com and clicking on the button for the Great Panther Silver Giveaway. Takes just a matter of moments out there. So go do yourself a favor, win yourself a nice coin. And speaking of the Colorado area, on Saturday, February 2nd in Denver, from 8:30 till noon at the Marriott Tech Center is going to be our man Tom O'Brien with Daryl Martin. They're going to be teaching dynamic trading strategies using the Nadex platform. So if you are in the Denver area, and that means all you folks in Colorado Springs and elsewhere, go over to the homepage. You want to sign up for the Marriott Tech Center dynamic trading session early because seating will be limited out there. Let's go back and take a look at these markets here. Let's go back and take a look at the indexes. As we take a look at the index, we were looking at the S&P 500 with Rick from British Columbia earlier. We were looking at the 1.272 butterfly pattern that, in essence, would complete at 1506.52, actually getting up to the 1503.23. So that is a completion in my book. And now all we're waiting for is the candle signal. And if we take a look at the candle signal right now, you've got a slightly bearish candle signal here, a little dark cloud cover signal. So we may see a reversal at this pattern out here. The other thing, if you take a look at my chart, if you're watching us on Tiger TV, the options traders out there are getting a little twitchy. And what I mean by twitchy is, and if you had Basil show fouls next, and he fouls the VIX on a continuous basis out here. You've got the VIX up again this morning, up 89 cents. That's up 7%. What the VIX is doing, you can see here, if you're watching the chart, it's starting to move up. And when the VIX moves up, that is oftentimes you take a look at the correlations between the markets here. So we got patterns that are completing, butterfly patterns. You've got the options traders out here getting twitchy because we are starting to see an increase in the VIX. You can also see in the S&P 500 traveling in that overbought territory. And now we've got some candle signals that also would indicate a potential reversal. Won't know until the end of the trading session today whether or not we've got reversal signals out there. But in the early hours, we most certainly do. As we take a look at some of the other indexes, well, we were looking at the New York Stock Exchange. That's the guy, that's the gal that each of you want to be paying attention to, because this has been the strength in the marketplace. And you will learn more from strength when they show weak hands than anything else. If we do take a look at the New York Stock Exchange, the low so far today, and this is key, 88.58.17. The low from Friday, 88.60.76. So the New York Stock Exchange has gotten above Friday's high, gotten below Friday's low, and if it closes in the red today, you will have had a key reversal day on a very key index out there. Today's actually a bearish engulfing candle, and if you were long, you would really start tightening up your stops, because the strength out here, which is also, it's got two patterns forming, it's got two 1.618 butterflies out there, you would be getting a important signal from the New York Stock Exchange index out there. We take a look at the other. Let's take a look at the Russell 2000. I'm going to go ahead and blow up the Russell 2000. Now, in the Russell 2000, what I am showing on the screen, which is kind of hard for me to believe, is that the Russell 2000 saying it could go to 921 and pennies, making a 1.618 butterfly pattern out here. I'm going to go ahead and just simply erase this off the screen. And let's just take a look at the retracement off of the high here from September the 14th down to the low of November 16th. And by the way, it's important to understand that patterns do repeat. And if you take a look at the pattern here on the Russell 2000, that was a key reversal day on November 16th out there. So key reversal day. What does the Russell 2000 have here right now? Certainly it's above the 1.272 expansion. Key reversal day on the Russell would be intraday for it to get below 900.10. So far it's only gotten down to 900.88. But again, this looks like potential a potential here of a key reversal day and a bearish engulfing candle out there. So pay attention to the Russell 2000. Pay attention to the New York Stock Exchange, because those will give you very key signals out there. Let's go to Pat in Framingham, Massachusetts. Pat, thanks for calling. Thanks for holding. How are you today?
I'm good, thank you. And you?
Very good. Thanks for asking.
I'm calling
You
about
wanted
Backtech. Yeah.
I'm sorry, you wanted to take a look at what?
Backtech. BCCEF. Mm-hmm.
BCCEF. Give me a second here. BCCEF out here. See if I can get this on my screen. Most certainly I can. Now, this is a real penny stock out here.
Yeah.
Tell us what you're doing and how I can help you.
I'm doing nothing right now. I've been following it, and I see that it jumped from 9 to 14.50. It's a long
Give me
term.
a second. Yeah, let me pull up a chart here. BC. Now, do you trade penny stocks? Is that something that you're focused on? You do. Okay. Boy. So this is. So I can't tell you anything about this stock because the chart. The very first time I actually pull up any data here is March 2nd, 2012. Is that when it began trading?
Yeah, and the volume is 0, but I see that it jumped over the weekend from $9 to $14.50. So, and I can't find much information.
9 cents, you mean?
Mm-hmm. Yeah.
Yeah. If you're gonna, I'll give you the best advice I can in trading a penny stock. If you're gonna do it, don't risk more than. And I'm not suggesting that you do it. But if you are, you don't want to risk first more than 1% of your trading capital. And what you would do is take whatever you're trading. So let's say your trading capital is $10,000. 1% would be $100. Okay. You take $100, you divide it by 14 cents a share. That's how many shares you would go ahead and buy, and you'd go off to your next trade. But there's nothing to give you. Unfortunately, there's nothing that I can give you information from on this stock chart. I can tell you it's illiquid as can be. 22,000 shares on a stock that sells at 14 cents. There's no money. It takes no money to push this thing around. So if you're going to trade something like this, don't risk more than 1% on your trading capital on that. And then if you're going to buy something, and buy it and stick it in the drawer.
Yeah. Okay. Thank you.
Okay.
Thank you.
You bet. You bet.
Bye
Have
now.
a great day, and thanks for calling, Pat. Let's go out to Max in Houston. Max, thanks for calling. How are you today? Max, do we have Max in Houston? I can't hear Max. I lost Max out there. Max wanted to take a look at KBH out here. And as we take a look at KBH, that's KB Homes. And I know Al will try to get Max on the line. But let's go take a look at KBH for Max for us. And let's see here. That's trading at $18.10 right now. And so we'll simply go ahead and take this stock chart apart. We can see KBH getting into overbought territory as it moved higher with some nice conviction. So this looks pretty good. This is January 23rd. Moves up with 17 million shares out there. Takes out a swing point. Looks like it takes it out with volume. And so this is setting up an A to B equals CD down, a confirmed A to B equals CD down. Let's go ahead and pull this stock chart back out here. KBH, Max, you out there?
Yes.
Yeah. Hey, Max, thanks for calling. Thanks for holding.
Yes, no problem. The question I had mostly was I was looking at the chart this morning. DHI and KBH seem to be having these bearish engulfing candles. And
okay.
I can wait until the...
That'd be great. Wait for the next break. We're going back to Houston. Our man Max. We're going to take a look at KBH. 877-927-6648. Be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. You got the Dow down 12 points right now. Composite up 5. Apple having a strong morning, up 2.5%, up $10 and change. And if you want to know where the Bulls and the Bears are, really, if you want to know where the Bulls are in the ES Mini, they are at Steve-O's Hammer Candle. That was the candle that finished coming into the 10:37 10:30 time frame. So the low here that you're looking at is 1491.25. If you're bullish, you don't want to see a close below that hammer candle out there. Not a tremendous amount of volume contract-wise, 158,000 contracts out there. Right now, as we come into the 11 o'clock session in Basil's show, it's also trying to create a bullish engulfing candle. Would do so if it closed above 14 or closed at 1494.50 or higher. But let's go back to Max in Houston. Max wanted to take a look at KBH Home, and he correctly determined that so far we've got a little bearish engulfing candle that has created, and KBH Homes has a confirmed A to B equals C to up, is in the overbought territory. And whenever you get into overbought, it's like eating too much. You've got to digest. In this case here right now, all we're seeing is a little bit of a move sideways. But tell us what you're looking at and what you'd like to do and how we can help you, Max.
Well, I did buy the, I think they're the April options on it, the puts. And
okay.
I think it was at around 20 or so because the premiums for the, I think there's the, I'm getting confused between, because I bought the DHI, also the D.R. Horton. But
okay.
It seems to me that with the overbought now, is it possible that this is just a little correction and then we continue up? Because it looked to me that they both had like a 1-to-1 ABC so far.
Well, the larger, so I'll answer it this way. Number one, I like to go back to any chart and take a look at other patterns because patterns you'll find repeat typically time and time again on a stock chart. So one of the things that I think that you should take notice of in KBH, I think you should take notice of in every chart, quite frankly, is those high. The very first thing you should do is go to those high volume days. So in KBH, you're going to see a high volume day back on June 29th. When it moved up with 27 million shares. You're going to see another high volume breakout session on September 21st. When it did it with 33 million shares. And then the most recent one that confirmed a larger A to B equals C to up, which was January 23rd with 17 million shares. If you go back to the first one, Max, back on June 29th, you can see also it was in an overbought area, made a little bearish engulfing candle on July 10th, and all that it really did was it came back to that breakout area, and it came back there on lighter volume. So it really gave an opportunity for folks to get into KBH Homes, any time around the August 2nd of 2012 timeframe. If we take a look at this again, gets into that overbought territory on that next move up on September 21st. So it moves up, actually get to a little bit higher high, still being in and just really working that self off. Now, this moved all the way back down towards that oversold level, towards the 30 level of the RSI. But what it did was it really only got back to the breakout session of September 21st. I suspect the third time is also a charm, and that third time is a charm, means that KBH could pull back to the 1707 level, but I don't suspect that it will pull back much further than that. It's got to work off the overbought condition out there, but that could just be moving sideways or come back to the 1707. 1707 area on the right volume might be a buyer of this equity, not a seller.
Okay. All right. Well, thank you very much for your advice. I really appreciate it. I enjoy the show, and I can see you guys on Tiger TV. In fact, I got you on my computer on my desk on Tiger TV.
Oh, that's great.
I can't call
Max,
from my desk.
Thanks so much for listening. We really appreciate it. So, folks, stay tuned. Basil Chapman will be up next, and I want you to remember this. I always want you to remember this, folks, and that's this. You've got an amazing power within yourself, and that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, and create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great day, folks. Look forward to seeing you in the morning. Take care.